Happy Tuesday out there, folks. This is Darius Dale here to present our macro minute for Tuesday, July 26, 2022. Starting with markets, we have stocks down this morning, commodities up, crypto down, dollar up, global bond yields down, market moving headlines. So global supply chains won't like this. EU ministers reached a deal to cut gas use by 15% through next winter as the prospect of a full cutoff from Russian supplies grows increasingly likely. Goldman said the European benchmark futures may jump to 210 euros per megawatt hour if flows via Nord Stream were to shut off entirely. That is a very dire forecast. One thing we continue to call out, just going back to this global supply chain point, if we see Europe rationing from a gas perspective, heating, et cetera, they're going to have to ration the production of goods. And this is something that, just similar to the lockdowns that we saw in COVID, it's very likely that any sort of incremental rationing down of this production of goods, particularly coming out of Europe, may actually cause an incremental pressure on supply chain disruptions and may sort of delay the kind of healing we anticipate, particularly from the goods segment of inflation over the medium term. So this is definitely not good in that respect, particularly as it relates to the liquidity cycle, both in the ECB and at the Fed. Next, will strong dollar equal weak guidance? So we got Apple, Meta, Meta, I laugh every time I see that, Google, Microsoft, and Amazon all reporting this week. Apple, Meta, Alphabet, Google, and Microsoft all derive greater than 50% of their revenue from abroad in the latest fiscal year. Amazon's not far behind with just shy of 30%. So this move we've seen in the dollar is obviously going to weigh on corporate earnings, corporate profitability over the medium term, particularly, and you look at it on a year-over-year basis. So will we start to see that weak guidance come through from these sort of internationally exposed players week to date, or are they going to wait till we get to the back half of the year when the growth data are much more sort of negative and they can sort of just blame the macro economy on some of the weakness that we expect in their corporate profitability statements? So we'll see. It's a process. This earnings recession we called out. I think we were the first person to say both real recession in January and earnings recession in February or March. And I think those things are going to increasingly become consensus as we progress throughout the year, thanks to 42 Macro Research. But anyway, big movers this morning. You got WTI crude oil up 2% to down 6% month over month. You're not going to get the Fed's not going to back off if oil stays at $100 a barrel or continues to rise. It's kind of you're damned if you do, damned if you don't. Growth hangs in there. We're going to get a rebound in crude, food, and energy prices, and growth falls off a cliff. Well, guess what? Growth's falling off a cliff. So it's and I've said this all year. Wall Street's not going to have its cake and eat it too. There is no easy path out of very elevated inflation. You got to take the road to perdition either through policy tightening or you just fade and decay into a series of stagflation. Neither of those are good outcomes for markets. So we just have to do what we got to do and get it on with it and try to get to a better state in 2023. Euro dollar down 70 bips, down 4% month over month. Great call there. Another good call by the 42 macro community there. Bitcoin off 5% to down 2% month over month. Ethereum off 9% to plus 11% month over month. So the big run up we saw, and we had a good conversation about this a couple of weeks ago about Bitcoin. If it violently broke through 23K, it would have been a big signal risk on, but it just kind of barely got up, stuck its head up. It violently broke through 22K. We'll agree with that, but got above 23K, meandered to 24K, and then just faded like a heavy stone in a pool. So this is an issue because it's a real signal that the liquidity cycle dynamics that we've been highlighting really all year, it's really helped us, manage risks and play with the significant lead relative to consensus. Those liquidity cycle dynamics, they haven't changed. The narrative around them has changed because we've seen some FOMO month to date, but the dynamics haven't changed. The reason Bitcoin is at 20-something thousand instead of 69,000 is because of the liquidity cycle. And that is continuing to deteriorate on a medium-term basis. So I just want to make sure we are just looking at the world from a first principles basis. I think there's been a lot of mental masturbation, if you will, in the last few months, or not last few months, last few weeks, to help investors sort of justify the FOMO we're seeing. But we take a step back and just say, is growth getting better? No. Is liquidity cycle getting better? No. Is inflation cycle getting better? Kind of, maybe. inflation expectations are going down, but the actual inflation data is actually getting much worse. So you think about those three things, it's very unlikely that we're going to get to a very easy, natural, soft landing, both economically and markets otherwise. So that's our view. We have a variant perception on that, increasingly variant perception on that. We're comfortable sticking with that view. Definitely go check out our research at 42 Macro if you want the actual analysis, the details supporting a lot of those rants. Anyway, getting to our VAMs and probable range process, bullish for dollar, bouncing off the low boundary of its probable range. This thing's got a 2.2% of upside to 1307 on the Bloomberg Dollar Index. If the dollar goes up 2% here, you can expect stocks to be down 5%. Bitcoin, Ethereum down another 10, 15%. That would not be good for risk assets. Gold bearish in the middle of its range. 10-year nominal treasury yield bullish FAMs at the lower boundary of its probable range still. High yield credit spreads bullish FAMs also at the lower boundary of its probable range. S&P 500, that is neutral VAMs. Got a little 2% of upside, 5% of downside. VIX, that is bearish VAMs, kind of in the middle of its range there. NASDAQ, neutral VAMs, you got about 3.3 to 4% upside, 6% downside. Neutral VAMs, Russell 2000, 2% upside, 7% downside. Bitcoin, bearish VAMs, bouncing off the upper boundary's probable range again. 12% downside to the lower boundary. Ethereum, bearish VAMs. What we talked about a couple weeks ago, or was it maybe last week or 2 weeks ago, said, hey, look, the last time we saw Ethereum break out above the upper boundary of its probable range was going back to early April. Guess who sold crypto in early April? We had a nice little trade here. We bought crypto in like mid-March and sold it in early April. It's a nice little trade. We got out of it in December 10th. I mean, that was a fantastic move. It was December 10th on the chart. If you sold crypto on December 10th, and we told all of our subscribers very explicitly to sell every piece of crypto they had in their portfolio, you would have had a much better 2022 for all my crypto friends. I know not everyone's levered long crypto to the gills. There's still a TradFi community out there. But anyway, just want to point out, look, the process has been working. We're not shy about that. We're grateful that we have a platform to help investors, to help a lot of people with this process because it is working. But at the end of the day, just manage risk. This thing is bouncing off the upper boundary of its probable range, and it's got 25% downside to the lower boundary. So if you chase the FOMO, just know that you're chasing it on your own accord, not on anything that we're saying here at 42 Macro. Shanghai Composite, you got 2% downside, 3% upside. Neutral VAMs, WTI crude oil, kind of in the middle of its range there. And then lastly, ag, bearish VAMs in the middle of its range. Industrial metals, bearish VAMs, it is overbought. So with that, Darius Dale presenting our macro minute for Tuesday, July 26, 2022. And join us at 11 a.m. I'm with my boys, Stephen Van Meter, Jeff Snyder, for the Real Vision Fed Live Week event. So come check us out. It'll be live, it'll be a fun discussion. Prepare to have your mind blown. Cheers.